All right, so a bit of divergence between ES and NQ here. Oh, sorry, not ES. YM. Kind of want to tempted to play this to the downside. Actually, I've been stuck in a short for most of pre-market, but I'm gonna hang on to it with that hourly doji the way it's looking. Very poor entry on my part, where I entered for this specific account. Let me see if I can pull it up here. Playing MES as opposed to ES. I like one of the reasons why I liked it was I liked the 64.25 rejection. I had a really poor entry before I realized that the 64.25 had like 5,600 positions above. So this is a dealer negative position, which is basically like a negative gamma. But whenever there's like a standout position like this, oftentimes we reject, which is what we're doing now. Actually, we had already done it pre-market, so I think in general it's just late. Because it was such a crappy entry. I entered with MES, thinking that I could end up taking like a 20-point loss. Yeah, here's my positioning here. Now, there's also massive positioning above at 64.75. And that's the JPM collar level that's being rolled today. Currently, it's in the money by about 50 some odd points, 55 points. It's a customer long put, so it's in the money. And that too should act as some sort of rejection, should we get to that point. Yeah, I like the 64.25 rejection. Pre-market, I just wasn't watching close enough. And by the time that I realized that we had hit 64.25 pre-market, I didn't enter. And once I noticed the rejection, that's when I entered. But now we got a pretty significant pullback because the 64.25 tap happened at around 8:05 New York time. And at around 8:05, yeah, 8:05 New York time. And then we had rejected pretty significantly. I think it gave about 30 points. And then it popped up for ES and NQ SMT, which is nice. Gave me a pretty reasonable add there, which puts my average at 64.52. And I also got an entry on my live account with maybe 5-point stop loss. So I'm going to hold my 5-point stop loss, also MES. funny enough, had it been ES, I'd probably be out already. Now my bias is kind of bullish for the day, but I was hoping to play a pullback before we continue the move up. And it seemed like a reasonable spot to play the pullback. I really like the entry on the live account. Oh, thanks. Thanks for that. Yeah, why do I only have one coin for the stop? Makes no sense. Oddly enough, my Ninja Trader shows 2 cons. But thanks for letting me know, Koshik. Appreciate that. I'm gonna trust my Ninja Trader because I execute on Ninja Trader. I'm just showing the trade on TradingView. Good chance I'm gonna get stopped out. But I'll hang on to it. I thought about moving my stop loss to break even on my live account, which my entry was at 64.64 ES. It would have tapped my break even stop loss should I had moved it. But with a 5-point SL, with a 5-point stop loss, I don't mind taking the loss there on the live account. But this looks like it's gonna head up. Believe it or not, I don't think I can do that, but it's part of my bracket order on Ninja Trader. But see, it looks like it's gonna hit anyway. So if it hits, then we'll test out to see which one governs here. I get the feeling that once we wick above, we could still reject. But all right, so we got stopped out there, and it looks like my entire position's closed, so we're okay. Previous day high. Yes, it was the previous day high on SPX. You're right. That's unfortunate. I was paying a little too much attention on ES, and I thought the previous day high was actually 15 points higher than it was. But it looks like we're testing that 64.25 level right now. Did we wick above? I don't think we did wick above yet. previous day high. Previous day high I have on SPX at 64.2731. Interesting. All right, I'm gonna go back to the OptionsDepth chart here. So the pre-market had a nice rejection at that 64.25 level, and then I had averaged in, which kind of, that was my fault for entering so crappy, like such a crappy entry. And then on my live account, I got in at 64.64. Probably should have taken like the 15 points it gave me. So I entered at around like 8:45, 8:50. And then it gave me about 15 points from there. I didn't take it because I was aiming for quite a bit lower. But I find that with the live account, I would normally trade a bit more strict. So I can only play it when I have like really good entries. So this is very tempting here for me to go short again. VIX is dropping though. That's interesting. Because this what the price action is telling me is that the 64.25 level is holding. Are you taking any trades, Koshik? I'm gonna give this a shot here. Just on the eval account. But I think I'm gonna get toasted. Might be holding a little too strongly to my bias. Oddly enough, like I am I was thinking a bullish move today. But I wanted to see a pullback. You want to short above 64.81. 64.81. That would be the ideal short. I'm just not being patient enough. But also, I thought I saw something at 64.25 on SPX. So that's a primary reason for that. Yeah, I think I'm gonna save the rest of my bullets for 64.81 as you're suggesting, which is the ideal short. $64.81, so that's about 6 points here. So we might get to 64.35, 64.40 on SPX. And Jolt's news. Oh, lovely. When there's 10 a.m. Jolt's news, I normally want to like wait for that. Especially if like a trade presents itself like 10-15 minutes before. Yeah, I normally when 64.25, if that hit the first time, that would have been golden. I tried to play a secondary entry with MES, and the secondary entry gave 15 MES points. Had that been like ES points, I probably would have taken the profits already. But because it was MES, I was looking for quite a bit lower. Ooh, there you, I think you just got it. Yeah, it doesn't look like, oh boy, 64.41. This one should be interesting here. VIX sitting at around 27.55. What's the dark red shade and yellow line indicate? Oh, the dark red shade is deep negative gamma. Like the red in general is negative gamma, but the darker it gets, the more deeper the negative gamma is. And the influence is basically the 64.75 dealer short strike, which is that JPM collar level that's rolling off today. So you can see why it's so deeply negative at that 64.75 level based on the strike. It's like one of like the standout strikes. You're looking at 17,000 positions roughly. Now, if we close under 64.75, that means the hedge worked out well for JPM because it's a long put. So they basically own 64.75 puts. So right now they're in the money. So their hedge is working to their advantage, I guess. Yeah, I'm not willing to pull the trigger. I find that when I trade MES, I want many more points because well, the profit isn't as good as ES. And I've only really shifted to trading MES because of this volatility. And it's a risk that I'm not willing to stomach on ES. I'm gonna zoom back in here. I didn't check what the straddle level was at open. Straddle was 50 points at open. So we're already almost there. Open was 64.16. Plus 50 is 56 or 66. Straddle low. You trade 7 MES? Yeah, that's good. I really gotta adjust the amount of MES that I take. But to be fair, I guess my my shitty entry, I really didn't want to double down on a shit entry. 66 to the downside. Yeah, I like the long trades today, but I thought that we might get a reasonable reversion back to test part of that gap that SPX has opened above yesterday's close, and then we would move up possibly. But I feel like it's been a straight line up ever since last night at around 8 o'clock, 8 p.m. or 8:15, I should say. Let me check the daily level. This is the daily gamma heat map. This is without the intraday positioning updates. So this is how it looks prior to, I guess, midnight last night. Yeah, that gamma trough happens to be, oh yeah, the yellow line. I don't think I told you. The yellow line is gamma trough. Which if you picture this in a 3D form, the gamma trough is the low. It's like the deepest of negative gamma. And then after that, if it's like once you hit the low here, then you kind of move positive out of there. It's still negative gamma, it's just more positive negative gamma. So if the reading here is negative 500 and let's say negative 500, here at 10:18 p.m. or a.m. Once you move to the other side, it ends up being more positive. So you start getting readings like negative 445. And then as you get lighter, you get towards 300, negative 300, negative 200. Same thing here on the other side. NQ is also close to its previous day high. It hasn't wicked above it yet. Yeah, so that's essentially the reversion that I was playing off the deep negative. Well, it wasn't off the deep negative gamma, but it was off a pretty large negative strike level, which is 64.25. Oftentimes you get a nice rejection, which is why I wanted to play it. I missed it, and then I tried to play the secondary entry. But yeah, that 64.75 level is creating this massive negative gamma, the deepest of negative gamma. So oftentimes you do get a reversion off this gamma trough. I like the gamma troughs off the daily the best. I find that for whatever reason, the dailies work much better. And I think the daily level happens to be around, depending on the time, it hovers around 64.71 to 64.75. Yeah, and I think I can show you the 3D chart. Give me a second here. So 64.75 is right here. And you can see how deep that negative gamma gets. And you can see the balls. They're rolling towards that deep negative gamma. And obviously it's the deepest, closest to expiration. But yeah, that the heat map that you're seeing is essentially this 3D chart. And the gradient is what gives you the deepness, the depth of the gamma. SPX levels to ES, more or less, I would base it off like the opening level or the close level. So like for instance, I think right now, well, I can reference right now that we're at 64.50 SPX and the ES reading right now is 64.92. So it's basically like a 42, 43 point difference. And that generally holds. It changes as you approach the quarterly futures roll. So when ES rolls its contract from the front month to the next month, every quarter they do that. So March, I guess, like, I don't know, March, the second week of March was the last roll, which is why you have this massive price difference. And then as you approach the expiration, the next expiration would be in June. I think it was the second week of June. The price gets closer and closer. So come like the first week of June, there'll be like maybe a 5 to 10 point difference between SPX and ES. All right, so we got the news. Not much of a reaction here. NQ also swept. So could get some sort of pullback here. That was the VX futures, the VIX futures, just swept the London lows, or the overnight lows in VIX, or the VIX futures, I should say. Zoom here. Because the scale is all messed up because of a 64.75 strike. I hate when the breakdown by strike isn't clustered so well. Like it kind of looks like a fishbone pattern. And when it's like that, I don't have like an edge reading the breakdown by strike. Tried another short, but I'm basically throwing up a prayer for this one. I'm hoping that because NQ swept too, at least we'll get a move down towards maybe 81 or even lower. 81 ES. All this is an effort to just break even on that eval account because of the whole horrible trade session I had so far. Took this one on ES, so because I managed to get the risks relatively low. My stop loss is already at break even, so I have no edge reading the breakdown by strike. I do like a move running up to that JPM collar level, which is that 64.75 strike, but I don't think it's going to be a straight line. gonna take it off there for 10 points. Even though there's potential to move further down towards that 64.25 strike on SPX, which is another 10, 15 points. Yeah, 64.74. I'll be watching SPX on this one. Yeah, I think this morning really threw me off in a sense that I missed the one trade that I probably should have taken and then try to catch a secondary one, a secondary move. Which didn't pan out. Hang on, why do you like 64.74? Is that a volume footprint level? Or is it the fair value gap you're watching under 5 minutes? Also value area high. I'll probably kick myself later for not holding it, but I felt like I was approaching tilt or something on this one eval account, so I didn't want to push my luck there. It's also interesting to see the charm flip line here too. The charm, that yellow area in charm is suppressive. So right now, I think you have a reading of about 29 charm points, which if you multiply by -2, that's the amount that the dealers have to sell in order, because they basically have to sell that number of futures every 5 minutes that pass. And then as you approach that 64.70 to 64.80 level, which is roughly where that JPM caller level is, if you can get past that zero charm line, once you get past that zero charm line, it becomes supportive. Well, dealers would have to buy futures above that zero charm line. Right now, charm is reasonably high. Normally, you get a charm reading of around like 5 to 10 charm points, but right now we're at 30, which is normally what you see towards like 1 o'clock to 2 o'clock. Yeah, and then as you approach like near the last hour, that's when charm really kicks up above 50 points and up to like 100 points, which is when it's more influential. Alma had like her pivots here on ES, 64.75, 64.80. Oddly enough, we're above that pivot right now. Currently just kissing that 5-minute ADMA line. Based on the YouTube channel that you watch, are we in positive or negative gamma right now? And where's that flip point? Nice. So you can actually play reversions right now. Yeah, you might as well give it a shot. I don't know what their, like, do you know what their cost is on a monthly basis? I've I've gone through my fair share of subscriptions to Spot Gamma was one of them. Unusual Whale was another one. 35 USD. That's, or you, yeah, okay. That's actually pretty good. That's not bad at all. That's what I think for like first few years. Actually, I'm still trying out subscriptions here and there. So, but yeah, a lot of it is trying it out, give it a few months, and see if it sticks, see if you like it, and how it compares to other services. Oh, why does it go to 275? That's insane. What does a 275 offer that a 35 doesn't? Adding order flow? Interesting. Yeah, I think OptionsDepth is like 150 US per month USD. But that was like with the discount that they offered me at the time for being like an early adopter or something. And the best I get is like 10-minute interval updates, and it's only SPX and VIX. Yeah, there's like very few services that ended up sticking for me. I think I've probably used OptionsDepth for the longest period of time. And then Vol Signals is that former market maker dude. I don't know if you follow him at all on Twitter, but he essentially taught me how to read the OptionsDepth information prior to him creating his own platform. Once he launched his platform, it ended up being like $300 a month. So I was like, yeah, there's no way I'm going to jump from OptionsDepth to VS3D. Though the platform is, I think, it has a better UI, which is kind of nice. But I'm still currently subscribed to VS3, not VS3D, like it's Vol Signals Discord. So more or less, I just kind of listen into his morning meetings, see what he says, see how he reads the market. He normally likes to play options, but asymmetric options. So for instance, if he sees a pin in the market, a potential pin in the market, he'll play a butterfly position, which basically has max payout at the center strike. You basically have two wings, and the center strike is the largest position. So it's like 2 times. You have 2 positions in the middle, which is the body of the butterfly, and then you have the 2 wings, which is on, I don't know, it could be like 10-15 points away. Outside of those wings, you have max loss, which is a defined loss. So say it's like $3 premium, if you're lucky, and that'll end up being like a $300 loss. But if the edge is telling you, hey, we're gonna pin at 63.20 today, and you center your fly at 63.20, as you approach that price level towards the end of the day, you end up getting this asymmetric risk reward. Like it pays like 20x sometimes. So you can get like $3,000 or more, or even like 6K on a $300 of risk. And that's the way that he generally likes to play. And he doesn't always trade it. Like for instance, today in the morning meeting, he was suggesting that there is no pin. There is no pin candidate for today. That's high probability, so he won't be playing anything. But one of the things that he was stressing is that there's the JPM collar strike that'll be rolling off today, and they'll be reselecting their new strikes. So one of here's one of the things that he's actually discussing now. I'm just going to read it off for you. It might mean something. It might add a bit of context to what you were seeing here. Sent this at 10:08 today. There are a lot of futures in play here, and the strike. There are a lot of futures in play here near that strike. Remember, fully hedged, the in the money put requires around 70K futures to be held short against the market maker side facing JPM. The fund is long around 35K SPX puts. To convert to futures equivalent, you multiply by 2. Since SPX multiplier is 100x and ES is only 50x. As we move towards the strike, there's buying due to negative gamma, but if we don't go through the strike, what's bought must be sold by close. And we basically just recharge the potential energy coming from the inevitable charm flow. This is why crossing the strike today is an extreme event, because the implication is a complete flip of the net pressure intraday, wherein instead of completing the hedge and then experiencing a net delta buy around and after the close, we would unwind the entire hedge during the intraday session, as the then out of the money put expires worthless, which would be 0 delta. And the net impact into close for the entire reset would again be bearish due to the only remaining futures flow associated with the reset being the hedging of the new collar trade. A lot to take in. So the strike is basically a do or die for today, is the way I'm reading that. Sorry, I should say the 64.75 SPX put strike is the do or die level. As we move towards the strike, there is buying due to negative gamma. But if we don't go through the strike, what's bought must be sold by close, and we basically just recharge the potential energy coming from the inevitable charm flow. So if you're looking at the charm on the right side, the charm flow is pretty much suppressive, which means they're selling. Dealer hedging is selling futures. But as you approach towards the end of the day, let's say around 2 o'clock, and we're still sitting below that 64.75 level, you could start seeing some wicked selling. Yeah, Alma's what's interesting is the way Alma calculates her levels. It's also based on options positioning, but a few derivatives removed. She has her upside pivot at 64.83, and her upside target is at 64.93, which she only gives about a 7% chance of breaking out. I don't know how she comes up with the 7%. She says the target is heavily reversionist today. Chance to break out above is below 7%. Very strong local realized volatility dump would be needed for that. And then target would be sticky. So that 64.93 level, she's expecting strong heavy reversion off that 64.93 level of SPX. And if realized volatility comes down, then, which basically means we're sticky within a small range throughout the end of the day, throughout the rest of the day. So basically IV or implied volatility dumps, which then I think realized volatility also does the same. So if that dumps, then 64.93 ends up being a bit sticky. So it's very conditional. Her centroid today was at 64.26, which we broke above really easily. And that was that 64.27 or 64.26 level was basically that large 5K strike that I was paying attention to at 64.25 SPX. But that's coming off now, and it looks like there's only about 3,500 positions as of 10:30. Whereas the start of the day was around 5,600. So about 2,000 positions came off. $64.25. They were actually long calls. The primary position for that was long calls. at 64.25. So whoever was in that was betting on upside and started taking some off. Took about like 40% of the position off. Yeah. Well, no, not completely. The first MES trade, it's a loss of about 170, and then I took an ES, I think shortly after that, and that one blew out, and then luckily I canceled, or not canceled, but I managed to offset that loss, so I'm back to about 150, negative 150 for the day. And then negative $63 on the live account. I've generally been lightly sizing. The only time I have larger sizing is when I'm trading the eval accounts, which I don't mind trading like an ES, for instance, on those accounts in hopes of passing a bit quicker. Kind of interesting that we're sticky here at around like this 64.50 level, 64.40 level on SPX. Customers are betting on, oh, okay. So here, Alma gives a little bit of insight as to why we're sticky there. There is a, customers are betting on this with a long call spread, sticky at 64.45. So you can kind of see this loop here, which to me doesn't seem like large sizing at all. But this here is driven by a call spread, this contour. And you can see like a light gamma position, a light positive gamma positioning over here. Yeah, I agree with you. That's why I was going to try my luck trading overnight. But I got caught yesterday, or not yesterday, I guess it would have been Sunday. And then got stopped out, and then we moved up afterwards. Just, I think I gotta give a lot of room when if I'm playing overnight. Kind of like the way that those other guys who trade MNQ or NQ, when they trade. Because here's one of the things I kind of saw. Give me 1 sec. I'm gonna see if I can pull this up here. Let me see if I can get this in here. Okay. Let me know if you can see the screenshot. It should work. Yeah, so you got ES on the left, NQ on the right, and right here, see the edge of that node there? NQ, I find that NQ tends to respect the volume nodes a bit better. So we bounce right off of that level. And this is on the daily. And I'm using what's called an anchored volume profile. And previously, I only had it anchored to maybe about September, but I had to stretch that all the way back to account for up to May of last year on the daily. And oftentimes you kind of see that ES and NQ would bounce at a very key point. And you can kind of see here on, I think this was earlier in March, you can see it bounced off this high volume node that kind of sticks out here. It's not an exact science, but it's where a lot of where you can take like a strategic long position, especially if maybe you see something on like a 1 hour chart, a 30-minute chart, sometimes a 15-minute chart. In that case, I did see something on a 15-minute chart. I'm just looking back though. So this is with the benefit of hindsight. But at around like 8:15, we tapped that 22,960, 961.50, which happens to be roughly the edge of that node on the daily. And we had a nice bottom wick hammer candle type of thing, and we rocketed ever since up until, so from about 8:15 last night to about 9:30. And had you entered, say your entry would have been around 23,015 on NQ, 23,015 roughly, because you wait for that 15-minute candle to close. You'll draw down about 15, 20 points, let's say 20 points. And from there, it's a 400 point play, essentially. 300 to 400 point play. And your stop, let's say, would have been somewhere around that low. So like maybe 60, well, it would be about like a 60 point stop loss. So if you had one MNQ position, that's about $120 stop loss. And you would typically take that to maybe yesterday's POC. And yesterday's POC was at around 23,230. If you're like conservative. And then oftentimes these guys hold runners to a liquidity level like a previous day high or something like that. I'm still learning how to trade like that. Quite the adjustment for me. But last night I wasn't on the chart, so I did not see that playing out. Yeah, so that one had like a nice, I don't know, 15-minute candle. And then the previous day had like a 4-hour doji candle at about it was the 6 o'clock candle. And we rocketed up similar to today or this morning. But the 4-hour doji candle, I don't like, I don't love it as much because it was an edge of a node, but it wasn't an edge of a of that node that I preferred to see. Like, this is another node, right? Like an edge. And then if we rock it up from there, 62,200. Yeah. So that's roughly where the 4-hour close was. And then you would have rocketed up to the previous day POC. And the previous day POC would have been Friday's POC, and that would have been around 23,500. So it would have given you another 300 points, all while you're sleeping. And I totally missed the SMT. Amazing. 6450 can be good. Draw on liquidity. 6450. Yeah, I think you're probably referring to. Oh yeah, I see it now. 6450 on ES. Man, I hope you entered that. That was such a nice SMT. Holy smokes. 20 points within like 10-15 minutes. That was my mistake for not paying closer to attention there. One thing I do caution though about using the gamma charts, especially the OptionsDepth one, or more specifically the OptionsDepth one, I would say, because we always talk about dealer hedging flows or market maker hedging flows, which are the same. They are not the only flow in the game, right? So you have to be cautious about that. So we're back to Alma Centroid here at 64.25. Freaking under. Oh boy. I think this is the move I would have wanted to catch. Because it was faster. Like, it gave 20 to 30 points in 15 minutes. Brutal. And VIX is ticking back up to from 27.2 up to 27.92. The reason why I also wanted to see a move down this morning was I wanted to see a gap fill in the VIX. Because between Monday's close and the VIX open, which is London open at 3 o'clock, there's a gap between 69.5, 69.6 and 30.5. Did I say 69? I meant 29. 29.6 to 30.5-ish. And that's what I wanted to see built before we rock it up on ES. And I thought the rocket up would take us to about 64.75, which is that JPM collar level with like almost 20,000 in sizing. Yeah, the 50 draw on the liquidity would be nice. It's just slightly under the VWAP that I have. But NQ is still really far from its VWAP, so. I'm kicking myself for not seeing that SMT a bit sooner. You would have gotten away with like 8 points of risk on ES or MES. On the SMT, because you got a 2 5-minute candle SMT, and then you also have the high of day SMT. But today, I think there is definitely going to be some awesome movement, especially with the JPM collar roll that normally happens after 2 p.m. Nice. Let me know how it goes. I'd be very curious. I like people trying out subscriptions and then always like reporting back to see if they liked it or not. And at least GexBot is a real service. It's like a gamma based service. Whereas some of the people that I've seen try like Furus, the guys that tell you to trade or take trades based on what they call out or something like that. Are you getting a lot more information with the $35 per month? It's just 13 after discount for first month. Ah, nice. What a steal. Yeah, I think after a month of using it, you'll probably you'll know, right? And then if you threaten, I think if you you propose canceling the next month, a lot of service tends to give you like a 50% discount. So you'll probably end up at like 15 or 16 bucks per month for the next month. But you might actually enjoy it, so, or like it might work to your advantage. Man, brutal. I am kicking myself for not taking that SMT. And now we'll probably slow down a little. We're at the value area low on ES. I think it is. Huh. It's not showing that on MES though, which is interesting. This is the, on MES, this is the POC. So we should slow down, I would think. You have a demo version, you can check what's available on 35 USD and other services. Let me know if you get a breakdown by strike. I'm just, or an OI, like a option, open interest or whatever, for calls and puts on SPX or SPY. Curious if they give something like that, and would love to compare it to OptionsDepth. Oh boy, even a 30-minute close is nice. What in the world? I can't believe I missed that. Oh, nice. They do have it, eh? Yeah, if you see it on SPX, give it a shot comparing how today's open interest looks with in comparison to OptionsDepth. Just curious. Let me know if you need me to zoom out or to show you a very specific range so you can like screenshot and overlay with what you have. I know a lot of services that are gamma based, they don't they have like the option or the open interest that I guess every service has, like the way it's calculated. So for instance, like I have a interactive broker account, and it shows open interest also on the options chain. And the open interest differs drastically from what you see from the breakdown by strike. And you would think it's like a sum of the two, but no matter how you flip it, the open interest was always the open interest always has the basic way of calculating the options positions for that strike. So for instance, if the open interest shows like 5,000 calls at 64.20, you can't tell whether or not it's a short or a long call, but all of them are conglomerated together. Now, you might wonder why that would matter. The only reason why it would matter is if you subscribe or believe in the dealer hedging flows, because dealers hedge differently based on customer longs versus customer shorts of a call strike. So that's always been that's what I learned from Vol Signals, who is a formal market maker who basically took the other side of your trades, and just to help, like he basically trained us or educated us on how dealers actually read this information, which is why I had a problem using the free version of like open interest that's available on interactive broker. And when you split up the short and long calls and then short and long puts for a specific strike, then you start getting what OptionsDepth has shown here. Yeah, still in this very deep negative gamma here. Looks like we're on the other side of that 64.25 level, which is still the largest dealer short strike here. Thousand tick over bought. Interesting. So I hit the drawn liquidity, as you said, Koshik, 64.50 bottom wick on the 5 minutes, and then rocket ship back above that 64.25. So I guess we are gonna see that JPM collar level at 64.75. Back above Alma Centroid too. We got no trades though. I missed the SMT short at about 10:30, which I'm pretty cheesed about. Oh yeah, no problem, Koshik. It's gonna take some time. You're right. I'm always excited to try a new service too, so that's probably why I had so many questions for you. Yeah, you felt like you missed that trade too, eh? Well, yeah. I kind of wished, even after, like, I don't know if your the way you view the markets, if you got any indication at around like 10:30, 10:35, around there. But with that SMT, I kind of wish I shorted. But those were like the two cleanest moves so far. Like after 10:30 and then 10:50, 10:57 when it ran up. And that also provided, there was also an SMT between ES and NQ at the lows there. I scalped like, I saw that 5-minute candle, I scalped, but I only scalped like 3 points on ES. And it was likely because today I feel like mentally I've already exceeded my trade limit, like the 1 to 2 trades I normally take for the day. So it just didn't make sense for me to normally take a trade beyond what I've already traded. And I feel like I also misread the market, and I almost tilted that eval account at some point, which is why I kind of laid off all the other accounts. That 5-minute low was very interesting at 10:55 because you had a nice high volume bottom wick, and it was high volume on both ES and NQ. Main reason for the entry, I just didn't know how high we would go. I should have gave it some room. Normally, if my mind is if my mind was still in it and not compromised, it was like a 10-point stop loss, and I would have been able to sit in it and maybe trail it up, trail the stop loss up on the 5-minute candles. But all that to say, I'm just barely green on the day now for that one account. But we do look like we're going up now. What really bothered me about the short at around 10:30 was that the 30-minute candle looked really nice, and then on top of that you got the SMT between ES and NQ. So there's I think the 30-minute candle was like a shooting star. I think that's what it's called. I just call everything bottom wicks and top wicks. But it's, I guess, the 30-minute candle on ES was like a hanging man. Yeah, that was a good call. Good bias after 10. Great bias after 10. Even that short on ES that I entered and got 10 points, maybe. It was off the NQ previous day high at the 10 o'clock candle. I had shorted, but I only took like 10 points just to offset my loss from a little earlier. And typically I would have held that to the stop loss, which would have been like somewhere around 7-8 points stop loss on ES, which is the high of the day. And it would have made me sweat before going down. But again, today, if I had to rate my trading, it was just horrible. But I also find that ever since I started streaming, there are times that like I feel that it's like a mental strain to some degree, even though like I didn't have many viewers that drop in and come out, but it definitely is like this weird mental strain, and I was just trying to hopefully conquer that and basically use this as like my journal, and I can actually look back and watch it and see how I acted when I took a trade. But also I thought it was like a great opportunity to kind of meet people who are interested in trading GEX, because I feel like there's a void in the YouTube space where there isn't a lot of OptionsDepth streams that are going on. Mind you, I don't think they allow you to stream this. I'm like, I don't have many viewers, which is why they probably haven't picked up on it yet. You're not having money today, but you definitely gained some experience points. Yeah, that's a good call. Gained a lot of experience points. And to be fair, I sense like this potential tilt based on the rate of trades that I've had in like a short period of time, which is why I was like, okay, we're just going to trade this one account now. I'm not gonna risk a bunch of accounts. So the GEX spot that that you signed up for, does it look similar to that YouTube channel? I'm just gonna go through my histories. I don't remember what the YouTube channel is called. it is. Yeah, Pro Futures Trading. That's what it is. Ooh, chart integration with NinjaTrader. That is insane. That would work well for me. So zero gamma line. I see there's zero gamma line. Their zero gamma line was around 64, just under 64.60, I believe, on ES. 64. Yeah, which is why we're in net positive GEX now, according to them. Oh, is this how Atlas looks like? Okay. And we're hovering around the zero gamma line for NQ. That's interesting. Yes, are you only getting the net GEX major positive and then major negative levels? It sounds like you're getting a lot more than that, especially with the whatever looks like the breakdown price strikes or open interest, whatever they call it. And the chart too. Oh, it's like a web platform chart. Oh yeah, I see it. Just checking out the demo right now. And then the bar chart looks like I think it's a GEX reading, right? Yeah, what I'm seeing now, I'm looking at the demo, which is quite a bit older. I think is 90 days old, or even longer actually. But I'm looking at the bars. I'm hovering over it, and it says GEX by volume, GEX by volume, which is interesting because if you want to see a GEX chart, I can theoretically show you one. One sec. Positions. So here's GEX. This is the GEX chart, which doesn't look too different from the strikes. The positioning charts. They just happen to be GEX readings. Like you wouldn't have been able to tell that we were looking at a GEX chart now, or a GEX. The breakdown by strike is GEX as opposed to positions. My subscription is $150 per month, which is insane. But that was with the discount, and I think I ended up signing up at about 175 USD per month, and then they offered an additional discount when VS3D came out, just to retain their subscriber base. But I believe OptionsDepth is one of the cheapest ones out there doing what they do. I don't think I ended up checking what the spot gamma cost was, but as far as I understand, spot gamma tries to lump in a bunch of their other services, like the hero, their morning notes that they give. Which is why they're a little bit more expensive. I think they're somewhere around like 200 USD per month, but I haven't checked in a while. And then Unusual Whale added the breakdown by strike that looks like exactly like the one that OptionsDepth has. And I don't I guess I could use that one. They probably were the cheapest. I just don't know. Because they used to be somewhere around like $30 a month also on Unusual Whale. Oh, you see a lot of people use OptionsDepth on YouTube? That's pretty cool. I actually haven't come across anyone using it. Yeah, so I see I see Unusual Whale, and they have a market maker exposure, view real-time gamma exposure shifts into which institutional positions are driving market volatility. It's one of the things that they advertise now, which is nice. And their retail basic is, I think, $42 a month and $63 for the pro. Now I don't know if they give us like they just give us the breakdown by strike, but I don't believe they give us like the gamma and charm charts. It's interesting that you say there's a lot of pros that use OptionsDepth on YouTube. I'm curious if they live stream trading off of it. Oh, Doc. Yeah. I know Doc. He's also, so believe it or not, I actually found Alma through Doc. Doc was also in Vol Signals, the Vol Signals Discord. And Doc was also in the OptionsDepth Discord. So I've definitely seen him around. And I noticed on YouTube, on Twitter, he offers like a bunch of free levels. I don't think I ever got around to using his levels. But yeah, you're right. He does use OptionsDepth. Yeah. Because we're in that the OptionsDepth Discord together. He's not very active. Well, I say he's not very active, but he basically copy pastes whatever he has on Twitter and throws it onto the OptionsDepth Discord. Oh, he trades live on YouTube at 8:30. That's interesting. That's pretty neat. I actually didn't know that he live streams. But it looks like him and I have like very similar interests in the subscriptions that we have, because we're both, I guess we both tend to gravitate towards like that dealer hedging flow, which is why he was in Vol Signals. But Vol Signals, they're going to up the cost. They're going to increase the cost of the monthly subscription from like $89 per month in the Discord to like $300. So I think we have like a grace period up to the end of the year, and after that I'll probably have to cancel. Oh, you found him today. That's awesome. Nice. I'll definitely have to check him out. But he's also subscribed to Alma. And that's how I actually learned about Alma, because he shouted out like 5 people that he likes on Twitter. And Alma was one of them, which is why I checked her out. And after like running through her Twitter, like for a few days, I realized this is something that I want to check out, especially since her subscription cost was so low. It was like 35 euros based on the information that she gave. So I subscribed to her back in December, and I still have it to this day. So there's a lot of alpha based on what she offers. So I thank Doc for that for sure. You can check out his YouTube. Doc Trader McGraw. Oh, he streams with a few other guys. That's pretty cool. And it looks like he streams for about an hour. Oh, he has lots of character. He's calling someone out for being stupid. Oh, Vic's positioning today. That's interesting. That's funny. Yeah, I like that he called out at 64.45 SPX. Where if the price climbs up above 64.25, it's probably going to slow at around 64.45. And that was a good call. Very good call. Alma noted the same thing too. and it was kind of sticky there for a little bit. Now it was all driven by positioning. Because there was amongst all the dealer negative strikes, you had one that stuck out like a sore thumb, and that was 64.45. Yeah, that's pretty neat that he does this. And it looks like he does it like for an hour prior to open if he starts at 8:30. Oh no, did I look at the right one? Oh yeah, here it is. Yeah, they call that the depth view. So I can pull it up here. It's exactly the same thing. You can call it dealer or market maker positions based on strike. So for instance, if you look at 64.45, this was the positioning. 64.25, see the exact same thing. And if you, well, the breakdown by strike is the exact same thing as this, except the breakdown by strike, I have set it to update on every 10-minute interval. So I often look at the depth view, this table, when I want to explore outside of my typical range, and also see what's coming up in the future. So see what the standout positionings are in the future. So for instance, when we go just scrolling through here, I'm seeing like April 6th, April 7th positioning. This is a call spread, about 3,000 to 4,000 in sizing. So things slow down here. So they're collecting premium at this level into next week. It's a short call spread. And April 17th, I believe, is it's the monthly OPEX, the AM OPEX. And you got a pretty large positioning at 6,600 here. 6505 and 6450. A lot of put and call positions. So this one here, it's the 6600 position for the next OPEX, April OPEX, is 7,400 or 7,500 put positions. So they are, whoever is a customer there, they're betting on price action to be beneath this level, so that they can monetize their puts. But yeah, the heat map essentially gives me the exact same information, just a little bit more zoomed out, and tells me every bright position in green or in red tells me, hey, there's significant positioning here that could influence how the market acts as we approach that expiration. That's the benefit of knowing dealer positioning, or correct dealer positioning. So that way you can figure out how dealers have to react as we approach that price. I'm no guru in this though. And I still got lots to learn from both vol signals and others. But yeah, it's really neat that Doc does like a morning analysis. I've always thought that he posted that analysis on Twitter for the most part. But he's been doing this for quite some time. Holy smokes. I've never checked out his YouTube. But for you, with the GEX spot, I'm curious. I'm gonna go back to the GEX chart here on the breakdown by strikes. I'm curious if you are seeing something similar. In terms of the bar chart that you see on GEX spot. Right now I'm showing a range of 6,380 to 6,500. Be good to compare. Yeah, GEX by volume. So I guess the bars look quite a bit different here in NA than yours. This is just gamma exposure that I'm showing. I don't know that it's like by volume. It says here it's GEX. GEX is normally measured like by millions of dollars per point of SPX, per SPX point, I guess. But the bars probably don't look the same then, eh? Like 64.45 would be positive. Everything else is negative around it. The only positive GEX that I'm seeing, or GEX positions, is 64.30, 64.45, 64.60, and then 64.80. Oh, GEX by OI, that would be interesting. Oh, I didn't realize that you can mess around with the GEX to show different types of GEX. That's pretty neat. Yeah, I suspect that GEX by open interest is based on the simple way of calculating the breakdown by strikes. So the like every call is treated as a call, as a bullish position, regardless of whether it's a short or a long. And then puts are the same way. They don't distinguish between longs or shorts. So positive or negative positioning in puts. They just think all puts are negative gamma and then all calls are positive gamma or something like that. Um, I don't want to really mess around with my workflow right now, but I'd definitely be like Unusual Whale offers it for like $60, mind you. But I really like the daily gamma troughs and peak levels, because oftentimes that's where we get a decent bounce. So especially when it correlates to a certain spot, a certain liquidity level or a certain volume profile level. But I'll be very curious to learn or to check in with you over like the next week or two to see how you use it, and if you're able to use it to assist your trade style. Like you and I think we followed a very similar path in a sense that um, we seem to gravitate towards very similar things. In a sense that we started with ICT, probably regular TA before that, and then ICT help tell the story, and then after ICT, probably found your way to the volume footprint or order flow footprint eventually. And for me, I think I ended up gravitating towards volume profile and GEX also. But I tried the GEX that Spot Gamma offered, and it just wasn't working out the way I liked it. And then I found a guy which is Vol Signals, who was talking pretty loudly on Twitter, speaking out against the traditional GEX or the what he calls naive GEX, and suggested we use a platform like OptionsDepth, which is what he calls smart GEX. But it's always at quite the premium, right? So that was pretty much when I dropped Spot Gamma. I think I dropped Spot Gamma well before that because the levels weren't working out well for me, and Hero had just came out and tried it, and at the time I couldn't really find a good edge using it. But I ended up at OptionsDepth and Vol Signals, which is essentially where Doc is at too, but he's a bit more seasoned than I am. And I don't want to go out on a limb and say you might end up there too eventually. But I'd be very curious to see how you end up doing with the GEX bot, because you might see something that works on there that works very well, which would be pretty neat. And you're paying 13 bucks a month. Holy smokes. That's dirt cheap. But yeah, I'm thinking about calling it a day here on the stream. Likely pay attention a little, but I don't know that I'll take any other trades until late afternoon if anything sets up. Yeah, if you find yourself somewhere else on YouTube, on the YouTube universe, drop by maybe like in a few weeks, and I'd be curious to see how you're using GexBot and how you're liking it. I'll still be streaming the OptionsDepth stuff, so not to worry. I think next week though, I'll probably be I'll be taking a good break, so I won't be streaming next week at all. I'll probably come back and stream on like the 14th or 15th. But I'll stream up until possibly Thursday, and then I'm gonna take a reasonable break, and maybe come back on the 14th or 15th. And I definitely want to hear more about GexBot and see how your subscription with them will be going. Oh, that's awesome. Okay, so that's what the 90-day aggregate meant. And I think I was looking at the 90-day aggregate. Now, how they calculate the 90-day aggregate could also be very different from, like, I have no idea how OptionsDepth calculates their aggregate. I know that they place more significance on the ODTEs. But yeah, mess around with it, see where you end up. And if you're here like within the next 2 days, and as you learn how to use it, it'd be interesting to see if you can figure out a way where it looks exactly the same as the OptionsDepth, which will then kind of throw OptionsDepth out of the window at 10 times the price of what you're paying. Anyways, I'll see you tomorrow, if not next day, and if not then hopefully in the next 2 weeks. And I'll still be streaming, so it's just gonna take a short break after the Thursday of this week. Have a good one, Koshik.